The new income tax draft rules have put the old tax regime back into the spotlight. The government has been spending years trying to make the new tax regime more attractive to individuals. It has also made the new tax regime as a default option for many taxpayers. But it seems that the government is not willing to give up on the old tax regime just yet. But what do we know about the latest income tax draft rules? Well, the centre has released these draft rules for the new Income Tax Act 2025 that will come into effect 1st of April of 2026 that might just end up making old tax regime more attractive for some of the salaried employees. And here's how. The government has proposed expanding the number of cities eligible for a higher 50% HRA exemption. The people living in the following cities could also now stand to benefit under the HRA under old tax regime: Hyderabad, Pune, Ahmedabad and Bengaluru. Initially, a 50% HRA exemption was only to some of the metro cities, but now these cities have also been added. The government has also revised allowances that parents can avail of as well. Education allowance for children has been proposed to be revised from 100 rupees to 3,000 rupees per month per child, and this is allowed for a maximum of 2 children, and this might end up saving you some taxes on 72,000 rupees spent on education of your children every year. Hostel expenditure allowances have also been increased from 300 rupees to 9,000 rupees per month per child as well. That actually might mean tax saving benefits could extend to 2.16 lakh rupees spent by you on hostel expenditure for your children. And this makes the old tax regime slightly more attractive for many salary taxpayers who rely on deductions and exemptions to lower their tax burden, which are not available in the new tax regime. Remember, the government has also increased the transport allowance for disabled employees. This has been raised from 3,200 rupees under the old tax regime currently to 15,000 rupees plus dearness allowance for those in metros and to 8,000 rupees plus dearness allowance for other cities as well. This may mean that you now need to go back to your calculators or speak to your CA to find out whether old tax regime will actually end you saving more taxes. Remember, you can also continue to change between new tax regime and old tax regime once every year.